Sky News Business. This is Trading Day, live.
Let's bring in Chris Conway now from the Australian Stock Report. He joins us live from our Melbourne studio. Chris, good afternoon to you. Welcome to the program. I guess your view, we'll bring you in on reporting season in general. We've only had a few stocks, although some big ones reporting so far with Rio and CBA. How have you read the first couple of days of reporting season, keeping in mind we're in these volatile times now?
Good afternoon, Ingrid and team. Yeah, look, I haven't made too much of it. I think, to Martin's point, the overarching theme at the moment is what's happening in the macro universe, and that's really superseding, some of these company results that are dropping. So I think still the expectation is that we're going to have a relatively good reporting season, and I'm hopeful that this period of volatility won't last too long. The markets have reset a little bit lower. US markets tend to do this. They ran up really strongly. Everyone was saying we need a correction. We got one on the expectation that bond yields and interest rates are going to rise. That's now been priced into the market to some extent. I'm not saying there couldn't be further volatility, but I don't see this playing out for an extended period of time because once you rotate to the underlying factors like a strong US economy and double-digit earnings growth, then there's probably more to be excited about than be pessimistic about.
But I mean, as a trader, you'd be quite enjoying, I guess, the volatility, giving you some opportunities. Are you looking at buying opportunities at these levels, Chris?
No, not at the moment, Ingrid. I don't tend to trade through this kind of extreme volatility. Look, I'm a trend trader, so I just like to see charts moving either sharply higher or sharply lower. I had that previously, and it was a pretty good period. But no, I'm not looking to take on a whole lot of risk at the moment. The Aussie market for me probably rates no better than a neutral. And I'm really waiting for it to find some support and confirm that support, and then I can consider my next move.
All right, let's kick it off with Rio Tinto then and talk that result, of course, after the close yesterday. The stock's losing 2.2% today, Martin. What do you make of this move in Rio Tinto today? Is this just on the broader space, which is obviously being sold off, we should mention, because that Rio Tinto result was pretty stellar, plus a beat in the dividend, plus paying down debt. You couldn't really fault that report, could you?
Yeah, it's a pretty good result, and obviously the company's giving a lot of money back to shareholders. They've still got 1.7 billion US outstanding from their last buyback, and they've topped that up by another billion, as well as you said the dividend sort of beating expectations, and pretty good cost control and guidance to cut their debt further as well. So and lots of capex, so growing their operations. So there's a lot to like, but as you said, Ingrid, the sort of the big sell-off we had in miners last night, I think Rio HP both off 3% in London last night. That's kind of overwhelmed the result a little bit today.
Rudy?
Well, yes, and these guys are enjoying probably a once in a decade circumstances. It's the reason why people own commodity stocks right now, especially the big end of town. It's because of the cash flows they have and the capital management that should come from it. I don't think in that respect we're disappointed. I actually think they delivered. But it's not always easy to draw conclusions on a day-to-day basis. No. And that's why as an investor in the reporting season, you have to take a longer term perspective on things, because there's plenty of examples where stocks on the first day of reporting the share price goes down, and you look a week later and the share price is up a lot.
Yeah, and Chris, it's interesting because Rio Tinto and Fortescue, some of these miners actually did really well relative to the market on the day on Monday when we saw that huge volatility and then a huge fall in the share market. I think Rio Tinto was only down about 0.6%, Fortescue only down about 0.3% that day. So is this a bit of give back? What's your take on the Rio result and whether you'd be buying at these levels?
So I certainly thought it was a good result. The only thing that I could sort of point to in terms of the weakness today was some rising costs. There is some pressures from rising input costs, which is potentially having an impact. But yeah, everything else was fantastic, I agree. Would I be buying it? Yeah, look, I had said probably not long ago when it was sort of $82.50, maybe $83, wouldn't mind getting another crack at this at 75. It's not too far from there now, so if it peels back a little bit more, then yeah, I think it's worth having a nibble.
Yeah, I mean, in terms of buying into Rio at these levels, Rudy, there's a lot of bullish, well, you'd be across it, a lot of bullish analysts out there on BHP and Rio and the mining space in general. Where are you standing? I mean, would you be bullish?
You have to consider that all else being equal, commodity stocks are also a leverage of a risk appetite. So we need a bullish environment for commodity stocks to really reach their potential.
Yep.
So far, the market has remained quite skeptical in that whatever analysts put forward in terms of valuations and price targets, the market has not pushed the share prices there. Well, it has done that, for example, with other sectors to targets and over them. With commodities, it has remained skeptical, in particular the miners, not so much the energy sector. And we need an environment where risk appetite is rampant for those stocks to get to their full potential, I think. And at the moment, that risk appetite is a little bit wobbly. So I don't think Rio will be back anytime soon at the share price where it was a while ago. But I mean, it can get there later in the year if we all get more comfortable with what's happening in the bond market, for example.
I want to go back to Chris on AGL because we got results from AGL, of course, today as well. And they looked pretty solid, but I think you were pointing out to the lack of an upgrade in guidance, which may be disappointing the market today.
Yeah, so just on the whole, the numbers look really good. 27% increase in underlying profits, 7% revenue growth. Yeah, so they didn't move the needle in terms of their guidance. That remained, and it's a fairly wide range too. I think about 940 million out to about 1.01 billion. So it's a fairly wide range. No update, as I said. But the other thing as well, in their retail space, that side of the business is struggling a little bit, and that's because of margin compression. All the retailers out there are competing feverishly to get our business. The Australian consumer, in terms of energy, has wised up and is now shopping around. So their margins came down and they didn't attract any new business. Their account numbers stayed exactly the same. So I think there's a couple of elements within what otherwise look like a really strong set of numbers that might be weighing. And again, that weakness in the retail side of the business is at a time when energy prices are at sort of all-time highs. So if you can't make money in an environment like this, then that might struggle moving forward.
Yeah, Martin, the stock's down 2% today. What are you reading that as being attributed to?
Yeah, just having a look at the result this morning and seeing what other people are saying about it, it seems like there's a little bit of cost pressure in there, and also the fact that they reiterated guidance despite a strong first half suggests the second half's going to be a bit weaker or at least flat, and seasonally they tend to do better in the second half. So I think the market was probably a little bit, probably expecting a slightly better result and maybe a slight upgrade to guidance. So the fact that that hasn't come through probably explains the weakness today, Ingrid.
Yep, Rudy?
You have to understand, in reporting season, it's more about how people are positioned. It's not so much about the company itself. Having said so, this was a stock that was headed for $30 not that long ago, and that whole wholesale electricity momentum is now being diluted with the reasons the gentlemen have already noticed. It's costs and it's competition in the retail part of the business, and that is dragging down sentiment and is preventing a company from issuing better guidance. So I mean, it probably will remain under pressure, but at some point dividend yield support will kick in.
Yeah, a bunch of other reports to get through. We might just touch on one more, and that's Mirvac. Just given the property space has been a key focus of the Australian market at the moment, and Mirvac has obviously exposure to the resi market, in particular the residential market. So I might get your view just briefly, Chris, on the Mirvac result in general. The stock's actually up today.
Yeah, so the market didn't seem to mind the result at all. Profit came in from, I think, $508 million last time out to $465, so a not insignificant decrease. On the good side, however, the company did reiterate EPS growth of 6 to 8%, again, a fairly generous range, but they announced an on-market buyback of up to 2.6% of the register as well. So some good, some bad. Their office side of the business, industrial office and retail side of the business did really well. It is that resi space that you worry about. They do have very significant projects going on in the New South Wales apartment market.
Yeah.
And you just wonder, is this an early sign of that market really tightening up? But again, you pivot back to what they've said about reiterating their EPS growth, and you've got to take their word for it at the moment. It doesn't seem like too much of an issue. And again, the market doesn't really think so either because the share price is up today.
Yeah, and you wonder if they've got to be a bit tighter on costs, obviously, when it comes to resi development. A lot of these big developers were paying all sorts of money for, for sites, obviously, to build. I know they pulled out of one in Sydney's northwest in the Showground precinct, which was, obviously they had to put their numbers together and see that maybe it wasn't worth what they originally thought. Martin, this one, obviously a buyback helps boost the stock and trade, but when you delve into the numbers, you're a bit concerned about Mirvac going forward. Would you not want to buy into this one given the space in Australia at the moment?
Yeah, look, it's certainly underperformed, and it's, on our numbers, looking at a 20% TSR, despite the fact we've got a hole in it because obviously some risk there, and want to kind of a deeper dive in this one. So, I mean, Mirvac isn't just a resi play. The market kind of says it's a resi play like Stockland and just throw the baby out with the bathwater. It's actually quite a diversified business. It's got a big shopping centre business, got a big office business, so it is quite a diversified play. But obviously the sentiment in the market, all they care about resi. Are they settling the lots? How's the developments going? Their margins are a bit weaker in the first half than we thought, but settlement numbers are a bit higher. So we think net it looks okay.
Yeah, and strongly skewed, we should say, earnings strongly skewed to the second half due to the timing of some of their resi settlements. So that certainly might help the second half more than this one. Rudy, what's your take?
There's actually a different take as well. Mirvac is in that corner, which is very much leveraged to local housing cycle, plus it's being conceived as a bond proxy. Those shares have sold off a lot. Mirvac share price was $0.50 higher just a few weeks ago. So I think that will be one of the themes in this reporting season as well, that companies come out with results, but since the share price has dropped so much already, well, I'm suspecting that some of those companies, even when they come out with a weak result, the share price will not necessarily drop.
Yeah, it's interesting because, Chris, usually in this sort of market, if you with all else equal in a volatile market, you'd see sort of investors rushing into these REITs and these sort of, these safe haven defensive sort of plays. But in a market where, interest rates are obviously rising, that insurance policy somewhat goes out the window, right?
Yeah, absolutely. Look, I would reiterate Rudy's last point though, and I had a look at the share price before coming in as well. He's exactly right. It's since December, the stock has fallen from about $2.55 into $2. So it had already copped the beatdown that perhaps everyone was expecting, and the results weren't bad today. So again, just to reiterate what Rudy said, there is the very high chance that these stocks will cop it leading into the results. If they're not as bad as expected, they come out looking okay.
All right, Chris Conway, we really appreciate your time on the program as always. We'll leave it there with you. Thank you.
Thanks, guys.